Assalamu alaikum everyone. Today in our interview series, we're in conversation with Mr. Syed Ghazanfar Agha, who's the Senior Executive Vice President, Group Head, Chief Compliance Officer, Samba Bank Limited. Mr. Agha is a seasoned wholesale banker specializing in compliance, treasury, corporate and investment banking with over 30 years of experience. He has set up businesses and managed teams for all areas of banking, developing special expertise in corporate banking, compliance, trading, treasury, ALM, and sales. Mr. Agha has worked for some of the largest banks in Pakistan, like UBL and Standard Chartered Bank, and was the first to represent Pakistan at ISDA, becoming their regional representative. No introduction would be complete without reference to his motor racing champions. He is a passionate sportsman and winner of motor racing championship for 5 consecutive years. On behalf of Tresmark, we would like to thank you, Mr. Agha, for giving us this opportunity.
Thank you.
I'll start with your most recent role, being the Chief Compliance Officer. Regulatory technology is a very real movement that is already having an impact on the regulatory landscape. How is regtech helping your bank manage risk and compliance?
So as you said, I moved into this role very recently. And as Group Head Compliance, my foremost purpose is to bring in technology to the max level possible. So we're looking towards AI, and regtech is really the cornerstone of how compliance is going to be managed in the coming years. On-site inspections and on-site enforcements are going to recede in favor of technology. And AI is the key. So I'm looking at a lot of technological solutions to us. The idea is to grow technology and leverage human capacity and the staffing that we have with higher efficiencies. So we will try to have them do more, and their productivity should increase by using technology. regtech is integral to the new paradigm of FATF that we are looking at, and the new paradigm of compliance that we are looking at globally. So we are implementing new systems. We've evaluated multiple ways of greater artificial intelligence involvement in each area of banking that we do. And hopefully regtech will fit in hand in glove with it, and we'll move to the next level.
Speaking of risks, the next review of FATF is coming in February next year. What are the chances that Pakistan will remain in the grey list? And if it is removed, then what will be its economic implications?
So the economic implications are huge because there's an overhang, there's a sword of Damocles sword over Pakistan's head. And if we continue to remain in FATF, obviously people are scared, and that element of risk remains. And as you mentioned, I've traded the largest derivatives trading book in Pakistan. So a lot of risks get evaluated when you take positions. And the risk of FATF overhang on Pakistan continues to be built in all the business that we get. So the upside is unlimited. If FATF is cleared, we will obviously do very well. And I don't see any downside risk at all. We're not going to get any worse from where we are. This government has done very, very well. And the best part is that the vested interests have a far smaller role, or are far more invisible this time around than in previous attempts to clear FATF. And they've done a lot of regulation. On September 30th, they came out with a new AML Act. It's very comprehensive. It still hasn't been fully enforced, but it will get eventually because it's the law of the land. And I think they've made wholesale changes, and there's a whole paradigm shift that you're going to witness in the way AML is looked at in Pakistan. And FATF will appreciate the fact that Pakistan is doing a lot of stuff that I travel the world frequently, and I've seen a lot of banking across the world. I don't think people are as stringent as Pakistan is being right now. FATF is helping us clean our shop, but sometimes an overkill is also not the best way to go.
Right. So where do you think the right balance is?
I think FATF has helped us fix a lot of things that we should have fixed without somebody else pushing us to do so. But we're overdoing some of the areas of watching new accounts being opened, and the amount of documentation that we're asking for. So it's becoming a lot more cumbersome in establishing the identities and establishing the transaction flows and establishing each transaction and the veracity of each transaction. Sadly, if we weren't in FATF, we would have needed to do it. So had we gotten our act together initially, we would have never ended up in FATF. There is little doubt that Pakistan was the hub of money laundering. Pakistan was the hub of anti-terrorist financing. controls that had to come in. Uh, but they've done very, very well. I think the government of Pakistan in recent years has done very well in sending out a clear message that we do not tolerate this kind of stuff and we are not in favor of it and we will do whatever needs to clamp down. So that clamping down process is obviously going to be painful because habits were bad. It's still very difficult to convince businesses to be fully transparent. It's still very difficult to tell people that you can't use a personal account for business transactions. It's still very difficult to tell people that yes, you have to tell us where your money came from, and we are not the FBR or we are not the police or we are not the FIA, but the rules mandate that we put this on record for being able to justify your source of flows in the future. So it is very challenging, and we are changing the mindset here. We're changing the entire culture of this country, the way they handle their money. So it's a huge task. It's painful, but I think the banks are at the front end of it. We are leading it for the government, and we need to do this for
And
Pakistan.
doing a commendable job in that way.
I hope so.
Okay, as being the corporate investment bank head up until recently, how would you rate the evolution of corporatization of traditional businesses, and how would you suggest to accelerate this?
So I think there's a great movement going on right now where SME and ME are being brought into the mainstream, into the main fold. So I've often given the example of China and India. Their entire growth engines were spurred by medium enterprises and small enterprises. In Pakistan, we had large corporates, and then there was a huge gulf between them and the lower ones. And sadly, the sitting IMF head for this region, for the Pakistan region, once asked me that Pakistan is surrounded by India and China on two sides, and they have the largest corporates in the world. And how come Pakistan doesn't have even one large corporate? So our largest corporate wouldn't even make it into the list of decent corporates of China and India. So it's all about culture. And I was just telling you a little earlier that we're content with mediocrity. There's a huge problem that most people around us are happy and content with what they have achieved, and the strive and the desire to push and achieve more doesn't happen. It's very healthy that we have a governor right now of the central bank who has a lot of global experience and who's seen a lot of the world. So the push to grow and develop SEs and MEs is happening right now in Pakistan. And the State Bank has come out with a lot of new policies and measures, especially as a result of COVID. They've used this period well. So unlike most economies and most countries that hurt badly, we actually benefited out of it because the resistances were lower and the appreciation was greater and the businesses needed support a lot more. So we could push the vested interests at the back, and they've done well. They've done well. So as far as corporatization of Pakistan is concerned, if you look at the Pakistan Stock Exchange, I think 75-80% of our companies have registered an increase in income and registered an increase in the price of their shares in the last 6 months, which is remarkable. It's really, really commendable. That means across the board, all industries have done well. And I can tell you, as a corporate head of this bank till very recently, all my clients and all our areas of business and all the people who bank with us largely we're doing very, very well. We have one of the cleanest portfolios in Pakistan with the lowest default rate. It says a lot about our risk management systems and about our compliance and about our prudence while lending. So it shows that we can grow and develop the book in Pakistan without necessarily taking a lot of losses. And our corporates are very responsible and they are very well managed. It's just a matter of putting the entire package right and showing that there's the right way of doing business, and we'll carry on doing that right way.
Point noted. You mentioned State Bank, and I would like to add to it that our central bank has indeed been very proactive in handling the COVID crisis, and it's done it really well. Um, what other measures could the State Bank have taken, or it can take to avert this economic crisis?
I think they started slowly off the bat. The first cut in interest rates was 75 basis points. And there was a survey held, there was a treasurer survey held, and like you mentioned, I've been a treasurer for over a dozen years. And so when they came to all the treasurers and the ex-treasurers, and I think your company also held a survey. So, at that time I had stood up and said that the interest rate should be cut by 200 basis points. And a lot of people said, okay, no, this is too much. And So sometimes you need shock therapy.
Yeah, deep, sharp cut.
And as the only man who was saying 200 basis points at that time, State Bank came out with a cut of 75 basis points. And within 6 days, they held another monetary policy and they cut it by another 150 basis points. And the cut was 225 basis points. And at that time, when I had proposed 200, most people thought it was absurd. But you have to take extreme measures sometimes. And this was the time that called for extreme measures. And since then, their performance has been outstanding. The wages package that they came out with, the turf package that they're pushing, the financing for export refinance, the drop in rates for other products. The support from the central bank has been remarkable. And this is what was needed. I think the first year or so, they were trying to understand what they need to do so that they're fully thorough and that the measures are not half-baked and half-cooked. And now the measures that they've come out with have really helped the market catch up speed. So, we are galloping now. And this is mentioned that, autos is doing extremely well, steel is doing extremely well, rubber is doing extremely well, all the allied sectors. Cement is doing extremely well, steel is doing extremely well, construction is doing extremely well, all the allied sectors. Rice is doing extremely well, sugar is doing extremely well, wheat is doing extremely well, all commodities, allied sectors. So right now we are not seeing blips. We are seeing across the board. Cement had a productivity capacity of 120% utilization. Tell me, how can any industry function at 120%? I was speaking to the owner of Amreli Steel this last week, and I was telling him it's remarkable that people were reluctant to enter the steel sector only a few months ago. And, I was very clear with our risk people that this is going nowhere and steel is going to boom. And they've actually come out with an advertisement and they're telling people that we can't sell any more steel right now to you the way we could previously because demand is exceeded capacity. If you see the money on these vehicles, so obviously there's a whole vested sector that's involved in booking cars in excess, and that's become a business. But at the end of the day, they are managing to sell them on to someone else. That money would not exist if there were people not willing to pay that kind of money.
And I truly hope it's a boom and not a bubble.
This time around, it's a boom. It's a boom for sure. Because look at the productivity. The biggest thing to look at is our textile sector is operating at 93 to 94% capacity. I don't think that's happened in a long, long time. So if prices had gone up and if valuations had gone up without actual economic activity, I would have been worried. Right now, I'm very, very bullish on Pakistan. Our biggest threat is external. Our biggest threat lies in the West shutting down. The way the West is closing shop, obviously demand can go down. But I've been explaining to people, for Pakistan, if we manage it well, so this was the global pie. It's come down here. This was where we were as Pakistan. So even if we go up to this much, we will still be able to double, triple our capacity. So in the textile sector, for example, we've hit capacities. We can do more. And there's a lot of capacity enhancement that's happening as we speak. Especially the home textile sector is doing remarkably well. So there are garments being sold worldwide. There is fabric being sold worldwide. Even if it comes down to 50% of what it was, we were less than 1% of the global market. So the upside for Pakistan is substantial. And with China becoming, and we used to tell people continuously that, there's a huge concentration risk of China. China was the world's workshop. And as 40% of the world's factory, the world took a huge beating once COVID-19 hit us and hit the world in early February and March. And we as a bank had a rapid portfolio review, which is called an RPR, to evaluate all the people who were dependent on Chinese imports for the manufacture and how would they be hit because China was shutting down. So it's been a huge benefit to Pakistan across multiple fronts, with a lot of businesses globally realizing that they need to diversify off China. And in that diversification process, we have benefited substantially. And with India mismanaging the entire COVID situation, it has helped us. Sadly, as I mentioned again, we are not a people who push very hard for excellence. After a certain level, we cut off and most people are content with what they have. My journey over the last 3 decades has been to keep excelling and try to keep pushing our people to excel even further. So the desire and the demand to improve our efficiencies has to be continuous. And a lot of new people are the younger generations coming into our family-owned businesses across Pakistan. And they're better educated and they're more dynamic. So there's a lot more aggression that is coming into our businesses to compete
Absolutely.
globally rather than just being content with what we have.
Absolutely. Mr. Gaga, now I'll take you back to your areas of expertise, which is Treasury. You've been heading Treasury for about 12 years. And I would like to ask you that our rupee has been one of the least volatile currencies in the region. What is your outlook on the dollar rupee parity?
So I think that the rupee, so this government and this central bank has worked very hard at setting up a fair parity value, and I think they're watching REIR very closely. At least I am for the last 2 years, and I've seen a clear link and linear equation to REIR. REIR is the real effective exchange rate. It's a function of our inflation, our trade with various countries and various economies, and it values. So when we started going into elections in 2018 and early 2018, if I remember correctly, our REIR was at 127. That means the rupee was overvalued by 27%. And obviously our exports were hurting and our exporters were crying and complaining, and imports were going through the roof because it was very, very cheap and encouraging to import. From the 127 REIR, this government brought it down to 89, and that had a huge shock factor. There was a 40%, 35% deval. We were at 125, 130, and we went to 165, and it was that 37, 38, 40 rupees translated into near 30% deval, and it shocked the system. But I think that shock was necessary for us to get our house in order one time. And over the last year, if you see, the rupee's done very, very well, and it's a float. It's fairly more transparent than it was previously, but it's still. I think the last real number was 93, 94, and that's where it was 92, and we are targeting it at 93, 94. So I think a 6% undervalued rupee offsets a lot of our. So our energy is more expensive than with most of our competitors in the region. Our human resource cost is more expensive because we've played a lot of politics on HR cost and energy costs over the last few years, and it's hit our businesses very hard. So this 6-7% discount in the value of the dollar and keeping the rupee undervalued has really helped our businesses do very, very well. I think that policy needs to continue. So if REIR was to go to 100 today, the rupee would be sub 150 very, very easily. So I'm not looking at a weak rupee. I'm not looking at a sharply deteriorated. Luckily, God has been very kind. And there were a lot of people who were talking about 170 and 175 and 180 and 200 at end of last year. Then as of June this year. Then as of end of this year. So we depreciated very sharply from 154 to 168 when COVID came in and everything locked down. But it was less than a 10% deval. Most currencies in this region took a beating that was a lot more than ours. And since then, we have recovered ground substantially. We are back from 168 to 160. And this went down to 158. So, 10 rupees really means a 6% revaluation from the highs of 168. And I think it's commendable that people now understand that it's not a one-way street for the rupee any longer. If it goes to 168, it can go back to 154. If it goes to 154, it can still go back to 168. So stop speculating on the rupee, focus on your businesses, be more prudent, lock your profits, run your businesses efficiently, focus on saving on energy costs, focus on saving on HR costs, bring in efficiencies, bring in newer technologies, and don't speculate on the rupee alone. I think
earlier on businesses did have a tendency to speculate on rupee and mint money out of it, like make profits out of it. But now, since that area has been taken care of, they can focus on the real issues.
Absolutely. And we've been saying that forever. And like I mentioned, derivatives, that we used to run a huge derivative book. And I used to keep telling my clients continuously that your business is not exchange rate. Your business is producing cars, tires, rubber, textiles, fabric, whatever. So focus on your business instead of speculating on the rupee all the time. And the government also, encouraged that kind of thing because there was so much money to be made by keeping the rupee short, running a short position on the rupee, that people would just make a lot of money out of deval, which would happen in huge spurts every couple of years, a few years. So now that it's moving both ways, it's the businesses are forced to challenge. And with COVID, work from home policies, technology coming in, regulatory infrastructure coming in, and you talked about regtech earlier. A lot of regulatory technology coming into place. I think the world is reinventing itself, and I think Pakistan is at the forefront of that reinvention.
Good to hear those positive words from
I'm
you.
I'm an optimist. I'm an eternal optimist.
Thank you so much for your time, Agha Sahab. And on that note, we'd like to wrap this up.
Thank you, and I wish you the best of luck.
Thank you so much.